Welcome to the Money Mastermind Show. Let's talk money.
Welcome to the Money Mastermind Show. Every now and then a big change comes up in your life, and for the most part, it's usually expensive. How do you make sure you can afford major life changes? Tonight, we're going to delve into a number of life changes and how you can financially prepare for them. Let's introduce the members of the Money Mastermind Show. We have Kyle Prevost of youngandthrifty.ca, Miranda Marquit of Planting Money Seeds, Peter Anderson of Bible Money Matters, Tom Drake of the Canadian Finance Blog, and I'm Glenn Craig of Free From Broke. Before we start, if you're watching us live, there is a questions app on our event page. So if you have any questions about saving for major life changes, please ask that question. We love to answer them because we love hearing from our audience. So if you are out there, let's hear from you. So, major life changes. I'm just going to list some that we put together here. And these are the type of things we're going to talk about. Weddings, having kids, moving, medical expenses, going back to school, getting laid off, catastrophe, and death. I mean, those are just a few. It's happy stuff, basically. So how do we go about planning for these financially? I think there's some general things we could talk about maybe. And then maybe we could go into each one of these specifically just for a little bit, because I think every one of these can be their own episodes in their own. But we're not going to go that deep into them. But just to give everybody out there an idea of the things that they can do and prepare for these things. So, in general, look, we don't know what's going to happen. Some things we know that are coming. But what are some good things to have set up so that we can prepare for these major life changes?
Well, I think I always go back to the saying, expect the best, plan for the worst, and prepare to be surprised. You know, things are never going to happen in life the way you expect them to happen. So you really do need to kind of sit down and try to plan as much as you can ahead of time and get your financial house in order so that when these unexpected things do crop up, you're ready to handle them, whether it's having an emergency fund or having insurance or anything else like that. So it's planning ahead of time before these things happen. Even though you can't have a crystal ball and see what's going to happen in your future, you can still plan ahead to a certain degree.
That's the hard thing, though, isn't it? You know, just trying to think of the worst and then plan for it. Because I know a lot of people, they don't want to think of the best sometimes financially. So thinking of the worst thing, man, that's an act of work there. You know, people have to delve into something in their heads and whatnot and start dealing with situations there.
Yeah, you know, often at times it takes a negative event in somebody's life to begin starting to think about these types of things. That's kind of what it took for our family. My wife had an unexpected blood clot 7 or 8 years ago now, and she almost ended up losing her leg. She was in the hospital for an entire month, and she could have died easily from this blood clot. You know, before that time, we had some insurance and stuff, but we hadn't really thought about setting up a big emergency fund or having other types of insurance like disability insurance or better health insurance than we had already. So, you know, having something like that happen in your life can be a huge wake-up call.
Yeah. I mean, how many times have we heard that story where something happens in somebody's family or a friend of a family or a friend of a friend, and you go, oh, whoa, that's the wake-up call, you know? But, you know, for everybody that gets that wake-up call, there's somebody else where the thing happens and it's already there, you know, and you didn't prepare for it. So if you're out there listening, you know, take everything we say here as a warning of sorts. You know, you can get yourself prepared. So listen in and take action. What else, you know, maybe we can do to just generally prepare?
I think Peter pretty much nailed it. You know, build your emergency fund, have some sort of cushion somewhere, wherever you keep your emergency fund, whether you decide you're going to keep it in a taxable investment account or whether you're going to put it in a high yield savings account. I think it boils down to having that emergency fund and getting the proper insurance, getting the insurance coverage that's going to help you out. And going to be at a level that you can afford. One of the things that I thought about when Peter was talking about his medical insurance is that a lot of people get a high deductible plan because it's cheaper, but they don't think about the extra out-of-pocket cost and the strain that can put on your budget. And so when you're making those plans and saying, well, I'm going to try and save money this way, you need to also balance that, especially with insurance. Whether car insurance, house insurance, a lot of the time you're like, oh, well, I'll get this high deductible plan. It'll cost me a lot less. But then when the disaster strikes, all of a sudden you have to come up with the money for this deductible, and it's still very difficult. So I think it's important to make sure that you plan so that those things go hand in hand, so that you're like, well, I know I'm going to have a high deductible, so that's, I need to start building up my emergency fund so that I can handle that.
So I have that, whatever that deductible is going to be, you've got to have that
at least
somewhere. Yeah, I mean, we just recently had a fender bender, and we fall right into what you're saying there. We have $1,000 deductible, and it helps keep our insurance low, which is awesome until you look at the repairs and you go, well, either it's going to be less than that amount and I just pay for it out of pocket, okay, or you know what, I got to eat $1,000 now, and that's it's tough. I mean, look, $1,000 is a lot of money, no matter how you slice it. So yeah, you got to have that sitting there somewhere. So all right, let's jump into maybe our first one here. We'll start with one of the nicer ones here, a wedding. That's a big, giant expense, and if you believe what you see on some TV shows, it should cost tens of thousands of dollars and maybe be one of the most ridiculously priced things you'll ever do.
We knew someone who had recently been married.
I know, right?
I don't know. I don't know if we have anybody in
tell us about
like
getting
that.
married.
Somebody who
For those of you guys listening out there, I was married. I am married.
That was quick.
Wow, that was
the wedding
good,
itself
we'll
took
just go
place
right
a
through
few
the
weeks ago.
Sorry.
And I was amazed. I knew the wedding industry was sort of crazy. I knew that going in. But the high-pressure sales tactics that play on fears are just crazy. Like, wedding photographers, this will only happen once. You need these for a lifetime. And it's like, I think I saw my parents take their wedding pictures out 3 times, maybe. Like, they have the one, obviously, shot that they have up in the hallway, and other than that. So roughly, $1,000 per time you're taking the album out at today's photography rates. And then it's like... And then we need the professional photographer to come back for you to trash your dress? Like, I'm sorry. That's insane to me.
Based on that logic alone, though, like, shouldn't we be spending, let's say, $5,000 to get, like, a birth photographer?
Great point.
It only happens once.
That's only going to happen once.
Sorry, nobody.
Or like a bar mitzvah photographer.
With a camera and a flash.
There is a bar mitzvah photographer, so you can't even joke about that one. That's like a wedding. But at a wedding you're going to have 20 people taking pictures, but really not at the birth. I'm just saying.
Yeah, I honestly, we did a destination wedding, so I'm not sure how many tips I have for people going the traditional route, but I think it's pretty important to define early on exactly what's important to you about the day, and just stick to that. There's so many different ways that people will try to force you, and like people that have no vested interest, like aunts that you haven't talked to in 3 years, they're going to have opinions about what your table settings need to be. And it's like, who cares? It's a table setting. I couldn't care less.
Nobody will remember.
Yeah, your wedding favors that you spent $500 on, half of them got left at the table after their children tore them apart or something. Like it's just amazing to me how much money gets spent. Like the average numbers that I found ranged anywhere between $28,000 and $32,000. And when I saw that, I was like, oh my goodness, I don't have that much money. I know my wife doesn't have that much money. So we're not doing the average wedding, I guess.
So I'm guessing that you paid for it yourself then.
We did, and that's what I was going to say. That's the other sort of option, I guess, that's presented to some people, is that they can get some help from one parent, the other parent. Worst case scenario, you get help from the bank that you then get to pay off for the next several years, which I'm obviously not a fan of at all. I have yet to meet a personal finance person of any kind, blogger, expert, whatever the case may be, that's like, yes, go into debt on your wedding. It's a once-in-a-lifetime thing. It's a great way to kick off a marriage. Just don't hesitate. And
nothing makes you closer than sharing debt. Not quite.
You can't afford to leave marriage, so have fun. But anyway, yeah. So I guess if you have the parents thing, but you know what? I've seen that not work really well either. In terms of you know, when you take the money, you're giving up a little bit of say over the wedding, and now all of a sudden it's spiraling out of control, and your second cousin twice removed is being invited, and so I think it's good to get an early jump on that stuff, and I think it'll let you sort of. I know that setting a wedding budget's not the most romantic thing in the world, but I just don't see any way around it if you hope to keep costs sort of reasonable or under a certain level for yourself.
Yeah. I think, like, with a wedding, there should be either one of two goals, and maybe this doesn't sound like the nicest thing, but either you come out even between after you get all the gifts, or you come out ahead after you paid for everything, right? Because I think, you know, people give gifts at a wedding so that the new couple can kind of move on, start a new home, and do all that. But if you're taking all the gifts you got and just paying for the wedding, you don't really have nothing to start the new home with, right?
How many people do you think that's true for, Glenn? Just out of curiosity.
I don't know. I don't know.
Like $30,000 is a lot of money to get for gifts. If that's average cost of the wedding these days.
Oh, that's okay. Yeah, but I'm saying that's what, if you have to plan it yourself and pay for it yourself, then that's what you need to be your goal. And let's say if you can get that type of money, if you have that type of family that, you know, you're going to have 200 people that are kicking in, you're coming out with some good dough, don't waste it on something that you're never going to see that money again. You know, come out ahead. Figure out ways to cut corners this way. You can. If you want to do the honeymoon and do that, that's fine. You know, pay for it that way. You know, be able to put a down payment on a home, get some new china, get some, you know, come out ahead. That was our goal, at least. You know, pay for what we're paying. Get that money back, at least.
Yeah, the point about cutting corners was good too, Glenn, because based on Kyle's average price, I'd say we were about half of that, but we still had an average wedding. I don't think we paid full price for a single thing. Everything was negotiated and on sale and everything like that, and we came up with sort of a perfect average wedding without that same price. So.
I think what I learned is that anyone should have a side business as a wedding photographer. Because as soon as you had wedding before anything photography related, you just multiply it by 100.
Yeah, a wedding anything. Like, I mean...
Well, that's part of the problem with weddings and with a lot of these other issues too, is because they're such an emotional day, and they have so many emotions wrapped up in them that it becomes very easy to let those emotions overrule your good common sense. You know, and that's, I think, part of the reason why the average wedding is $30,000. I think our wedding was actually approaching that. Not something I am proud of, but it was my mother's or my wife's parents ended up paying for most of the wedding, and my wife is their only daughter, so it was something they wanted to do. So for me, that was ideal because they didn't make us pay for anything. So if you're gonna do it, make sure somebody else is paying for it. That's my tip.
I like that. That's my brother's tip too. Yeah.
There's always a cost, though.
Yes, and that's true. Family and money, there's always some sort of a string somewhere.
But I mean, look, even if you could do that, then still you're going to come out with enough gifts where, you know, maybe that's nice. You get a nice jump start. You know, people will still go and then just blow everything right afterwards or spend it on other stuff, you know? So.
And here's what I've learned too. Like, I guess maybe not to say that you all aren't in the age range, but I'm hitting this age range for the first time where I'm attending a lot of weddings. And one thing that's universal is that all the best parts of the wedding cost like next to no money. And as most things in life, just the personal moments that are occurring, the meeting up with people you maybe haven't talked to in a while, the after party that comes a little later in the evening, those are all things that cost very little money, and yet they're the best part of every wedding. So I'm not sure necessarily that, if you look at your value you're getting for $10,000 worth of decorations, I don't know. To me, the cost benefit in my mind, like the wedding's going to be pretty great as long as, in my mind, I was there and she was there. Not too much else could go wrong at that point, but
I think that's a healthy way to look at it too. It's looking at the value of what you're doing. Why are you having this thing? Just so you could have a giant whatever and hope that somebody says, ooh, wow, for the next 2 hours, because really they're going to forget about it eventually. Or do you want everybody together and just kind of enjoy what you're doing? So let's move on. After we're married, first comes love, then comes marriage, then comes a little kid in a baby carriage. So, how do you plan for having kids?
You don't?
Are you talking about emotionally or financially?
Financially.
There's no way to emotionally prepare for that business.
Yeah, I mean, that's some other blog.
Yeah.
I might know better than we do. I think you can plan financially in some degree for having kids.
Yeah,
Or at least you think you can.
Well, the first thing we did was take a look at what everybody told us we just had to get, and then start checking things off that list. And start crossing things off that list as in we actually don't need these things. And there's a whole list of things you could get, and it's even worse now. Than when I was pregnant with my son, he's going to be 13 this year. That many years ago, there were all sorts of, they're like, oh, you just have to get this, you just have to get that, and you just have to, and I'm just sitting here going, no, actually I don't. None of these things are necessary. And you're looking at this whole list of things that your baby just has to have, and you're like, how did I even make it to adulthood since I didn't have these things when I was a baby? How did my parents manage? And so it's just kind of interesting. I think the first thing you have to do is start going through the list and being like, you know what, really? No. And then the next thing to do is look for secondhand things, right? We had a crib handed to, kind of given to us. There was, we had neighbors whose grandchildren were all grown up and they didn't have a need for this crib. And it was this sturdy old crib from like way back in the day. And it was nice, and they just gave it to us because they didn't need it anymore. And just kind of looking around for that stuff. Baby high chair seat thing we got for free. The only thing I would say that you should really, pay for new is like definitely the car seat. The car seat is a must-have, but most other accessories you can either do without or find secondhand or get as gifts.
Yeah, I think one of the big things with children you have to worry about is the cost of the bringing the baby into the world in the first place. I think that's one of the big costs. It can run anywhere from $9,000 to $20,000 for a vaginal delivery, up to $25,000 for a C-section, or even more. I just had that up in front of me. I didn't bring that out of my head.
And remember that Canadian couple in Hawaii.
Peter?
Good point.
Yeah. Well, yeah, it is. It's from experience, and it's very, very expensive. And our son actually spent some time in the intensive care unit for infants as well, so that's extremely expensive. So if we hadn't had insurance, or good insurance in that case, it would have been probably $30,000 right there.
Mm-hmm.
So another good reason to have that big emergency fund saved up.
And I like your point about the insurance too. Once you know you're going to have children, that's the time to really reevaluate your insurance plan. I mean, it just really is.
And make sure that all the contingencies are covered there. Yeah. But, I like your point too, Miranda, about just like used stuff. Like if your kid is 10 years old, they're going to wear out their clothes. They're going to wear holes in their jeans. Their sneakers are going to get like wear down, if you let them, because they're going to play hard. But babies, you're sometimes lucky if you could throw the clothes on them fast enough before they outgrow them.
Oh yeah, we went to, well, first of all, we waited till after the baby shower, and then we went to the consignment shop to get like onesies and stuff. Like, you go to a consignment shop and get onesies, and you can get them for like 50 cents a piece, like between 50 cents and $1 a piece. Well, that's where I was in a cheap state. There's probably more somewhere else. And it was 13 years ago. But you look at it and you're like, well, you can get these onesies and another baby clothes. Well, my husband was the primary caregiver for the first 18 months. So my child never left the house in anything cute. He just left the house in like pajamas all the time. And he was always just wearing the like little footy pajamas. That's just what he wore. Sometimes when he was getting dressed up, it was like he has the onesie on, right? And just like maybe a pair of jeans.
Hey,
on
look,
top of the onesie.
you don't have to put designer names on a baby either.
No.
Honestly, the kid doesn't care.
No.
And half the time, it's going to tick them off.
That's right.
They don't want the fancy sneakers on. They don't want a button-down shirt when they're like, 8 months old.
I still don't want one.
Yeah. There you go.
Well, and I think it goes back to what Kyle was talking about with the weddings. It's like, take a step back and why are you doing this, right? What is your goal here? Do you need to like wave your kid around and be like, look at my kid? Or are you just like, is he being properly covered and cared for, right?
It does go back to the weddings too, because it's you fall into that, this is the first time, it'll never be like this again. If you ask anybody that has more than one kid, it's not. Like the old saying goes, the pacifier falls and you take it and you boil it, but for the second kid, you just kind of like blow on it and wipe it on your pants, So it's that first parent sort of psychosis where like you get like 15 books to read and you think you need all these different bouncy chairs and everything else. And the truth is,
you're a much better parent than I. Just like, well, here we go. Let's do this thing.
Another thing you have to keep in mind with having a child is the effect on your career and the income with that. Here in Canada, between maternity leave and parental leave, you basically get a year paid by the government at 55%. I know it's a lot less in the States. I can't remember how many weeks that is, but is it 0? I thought it was something.
Okay, so
up to 16 weeks, is it? But you get a total of like $0.
Right, yeah, so
just truly the leave, yes.
The Family Medical Leave Act allows you to take up to 12 weeks of leave related to any sort of like family type emergency. So it's not just giving birth or whatever. And so that you can get up to 12 weeks and they can't fire you or replace you. But they don't have to pay you.
Yeah. So we get that at least, so it takes part of that out of the equation. It's still not the full income though, so you still have to make that decision of how that's going to affect your budgeting.
Right. So I only took 4 weeks of maternity leave because we could not afford for me to take longer maternity leave. We had enough for me to manage the 4 weeks of maternity leave, and then I had to go back to work.
Yeah, and that's a really huge consideration and something that you definitely need to plan for. Like if you were a 2-salary family and now you're going to be 1, how are you going to cover that?
Right.
And especially one thing to consider is, let's say if it was your wife who your medical plan was on, if it was through her job, does your medical plan cover it? Do you have a medical plan? Because Cobra is expensive. We went through that. And you don't know how expensive a good health plan is until you're dropping like $1,200 a month on medical, and then you go, wow, that hurts. So yeah, that's something to plan for.
Yeah, you make a good point too about if one of you is going to be staying home with the child, and you're going from 2 incomes to 1 income, that's a pretty big thing to plan for too. That's a lot of money to be foregoing. It's a great thing to have somebody stay home with the kids, but it's also a financial burden. At our house, when we had our son, we started planning for that as soon as we found out we were pregnant. We just started living on the 1 income right away and basically banking my wife's income and saving that, preparing for that day when we had our son. So that might be something that people want to try as well, just trying to live on that 1 income before they need to. Yeah,
we did a similar thing as well. And yeah, I mean, it's surprising what you can actually do when you start cutting back. And the truth of the matter is, once you have a baby, you know, you're not going to be going out to restaurants and movies for a long time. So that money you save, you don't even feel like you have to spend it again, because you're really just not going to be doing a lot of the social stuff that you thought you were doing beforehand.
Your life is over. Keep that in mind, Kyle.
It's forever different. But, you know, Tom brought up careers, and there's a long-term effect too. You know, if you're going to be out of the workforce for a while, you're not contributing to retirement plans. You're not contributing to Social Security in the States. You know, so that's money that's no longer going into the pot. Now, it doesn't mean that you can't put money towards that with one income, but it's not always as easy as it is when you have two incomes coming in. So you really need to think long-term and think about those as well. So, let's see. You get married, you have kids, now there's no room where you live, so you gotta move. How do we start saving up for that?
So fun.
I didn't even try to put these in any sort of order. I'm just kind of tying this all together on the seat of my pants here.
Yeah, well, with the move, and I've done a lot of moving. I've done a lot of cross-country moving in 13 years. But yeah, with the moving, you have to really plan for it. You have to go through, you have to estimate costs, you have to do your best to save up for that ahead of time if you can, because it can get expensive. This last move that we had when we came to Pennsylvania, we were fortunate that we had help paying for it, and we still had to pay part of it. I mean, they paid for it cost about $5,000, and they paid about $3,000 of it.
The employer.
Yeah, the employer. So that wasn't awful. I mean, we could save up for it. In the past, we've done our own, and it was nice because it was like full movers, and they packed everything up, and that was great. And you have to look at those things and compare the costs. In the past, what we've done is the whole U-Pack thing, where you rent space like in a trailer, and then you pack it up, right? And then they go and fill this trailer as they go across the country and drop things off on their way. And then we drove, because we priced it out. And with the price of gas at that time, getting a U-Haul truck and then driving it and paying for the gas and then paying for everything else that goes with that, tolls and everything else, it actually costs a little bit more to rent the U-Haul and drive across the country than it did to just get the space on the trailer and then drive ourselves across. So you really have to look at there are just all sorts of options. You know, you have the full service mover, you have something like a U-Pack or a Pods or something like that, and then you have, you know, your budget or U-Haul option where you drive yourself. So you have to look at that, look at how much space you're going to take up. And the other thing is you have to say, well, how much space am I really going to take up? And then what do I do with my stuff when I'm done? Because and we were, my sister, when last time she moved, she taped out a section of the floor that would be equal to the space they were getting in the trailer, and then started putting stuff in it to get an idea, like a visual idea of what would fit. Because when you're getting ready to move across the country, you have to have a pretty good idea of what you're going to take up and how much space you're going to need. And so it takes a lot of planning. Or you can do what we did when we moved to Pennsylvania and get rid of 75% of your stuff. That works too.
It's always a good time to declutter.
Yeah, that's what I was thinking. Just get rid of it, and then you don't have to move it. It's literally the best way to go.
Yeah, or if you're handy with eBay or Craigslist, it could be a good time to sell stuff too.
That's right. And even if you don't sell it, keep track of take it to like a Goodwill. You know, take it to a charity place, donate it, and you have to keep track if you want to deduct it on your taxes and keep track of everything. But take it in and deduct it. That's what we ended up doing, because we sold a couple of the big things that we knew were very expensive, but a lot of the little stuff, we just tallied it up and took it in and got the tax deduction for it for the donation. On top of the fact that if you're moving for something related to your career, and your move, I can't remember, I think it's more than 50 miles. I'd double check that. And you're moving, you can deduct that. That's an above the line deduction. You don't have to itemize that. That's an above-the-line deduction on your Form 1040 here in the U.S. I don't know how it works in Canada. But here in the U.S., that's a deduction that reduces, it's great. And so make sure you keep all your records for what you pay for moving because you can deduct that on your taxes.
And then that's just all the physical move itself. I mean, you
Right.
can also just have your friends and buddies and family if it's a closer move and just
Oh,
rent
yeah,
a
yeah.
truck.
And
You know,
I'm
just
sure
pay
that
for
costs
pizza
nearly
and
as
beer.
much.
But that's just the move itself. You know, sometimes you also have to, like, if you need, whether it's a house or an apartment, if you're renting, you might need, you know, first and last month security.
Yep.
You might need a security for utilities. You're going to bring the cable guy in, or you're going to have to pay for that. You know, there's all sorts of other incidental costs that you're going to have to think about. And if you're buying a home, that's a ton of other costs that are going to be part of that. So what are some good ways to start saving for those things? I mean, I don't know that, you know, we've talked about how maybe you need to have an emergency fund, but, you know, let's have some quick, tactics to get that money in the bank.
So one of the first things we did when we realized we were going to be moving was we just canceled everything. We just canceled everything immediately that we knew we weren't going to need. TV, gym memberships, all that stuff. We just went through and canceled so that we could just put all of that money toward the moving costs. So we did that as well. And if you have enough lead time, then you can just start setting it aside. You figure out how much you're going to need and then start setting that aside. If you don't have a lot of lead time, then you just kind of have to hope your emergency fund can handle it. So, and the other thing that a lot of people don't think about, unless, like, if they're buying a house, they think about it because they have to, is their credit. But when you're moving and you want to get an apartment, a lot of the time nowadays, they want to run your credit first. And if you want to live in a nice area and in a nicer apartment, you need to have good credit. They're going to run that credit check. We had to pass a credit check before we could move into this apartment. So
Yeah,
that too.
we've come across landlords that ask for credit scores. I mean, it may not be entirely fair, but then again, these people are kind of letting you into their homes to live, so they want to make sure that their investment is saved as well. You know, so yeah, it's worth it for you to check your scores and history and make sure everything is on up and up, because you don't want to find out just as you're trying to look for a place that there's some fraudulent piece on your history, or, you know, that one thing that you didn't think was going to pay, you know, do something that dings you. You know, you're like, oh, I bought a new car before the move, and then all of a sudden it's like, yeah, well, yeah, that's why your history's not so great right now, because you just threw another loan on there.
And another thing too is some places will charge you a little bit more on the security deposit if you have poor credit. So you might get in, but you might pay extra on the security deposit, have to come up with extra money.
Yeah, and if you're buying a house too, that credit score can be even more important, because you can get the rate that you're going to get on your mortgage. It can be pretty drastically different depending on what your credit score is. So it can mean the difference in tens of thousands of dollars over the life of the loan that you're going to be paying, just because your credit score, you know, is however many points lower. And if you're buying a house, same token, and you want to get a big down payment, a lot of places are going to require you to have a bigger down payment these days, even up to 20%. That's going to probably take years for most people to save that much money up. So you're going to need to start planning ahead for that 2-3 years ahead of time, or even more.
So what would you say? You know, like a good online savings bank, and use maybe some automated savings plans, something that'll come right out of your check, maybe every week, every month, whatever it is, so that you don't even see it coming out, right?
Yeah, that's what we did. We just set up with Capital One 360, our online savings is there, and we set up a separate down payment account, basically, a goal savings account, and then we just set up automatic debits from there every month, and over time it adds up. So set that up as soon as you can if you think you're going to be buying a house anytime in the next 5 years, and start saving as much as you can towards that.
Mine's the same as Pete, but in Canada it's Tangerine. They both have their roots in ING Direct, but of course in Canada, we've mentioned it before, we've got the TFSA, so I put my emergency fund in there, and there's no tax on any of the growth. So it's, even though it's not the hugest emergency fund, it's still nice to know that if it does grow, it's tax free as well within that tangerine account.
And I think we could go back to our weddings too. You know, if you're married and something like a house or whatever is down the line, take some of that wedding gift and put it away. Never touch it. You know, let that sit there. Let that be your starter emergency fund. You know, or you know, you're getting a tax refund. That's a great place to start some savings if it's a nice chunk of change. You know, anytime you get that big gift, that big slide of money, you put it away.
Yeah, I think that's what they used to call like snowflaking. Anytime you get a little bit of extra money, change, or if you get maybe a small bonus from work or anything like that, just take all those extra funds, put that into your down payment savings account or whatever goal you're saving for. And again, over time, it's going to add up.
Now, Peter certainly touched on medical expenses, but you know, what else can we do to make sure we're financially well off to handle a medical expense, be it expected or unexpected?
So we talked a little bit about the high deductible plan. One of the things you can do if you do have a high deductible plan and you want to build up that fund is to get a health savings account. This is my very favorite account ever. I like it even more than I like the TFSA in Canada because I know it's shocking because the health savings account, it gives you a deduction for your contribution to the health savings account. So you get the tax deduction on the front end for your contribution. And then when you take the money out, as long as you are using it for qualified health care expenses, the growth is tax-free. So that is money that you get a tax deduction on, but you are never ever taxed on. So the health savings account is super fantastic. So if you have, but you have to have a high deductible plan in order to qualify. And there are some other requirements. So you need to check into that. And a lot of places where you can open your health savings account, a lot of them will let you, once you have $2,000 in your health savings account saved up, you can start investing that money in something beyond whatever low interest rate you're getting on it. The money beyond that $2,000 you can put in an index fund or whatever to help it grow a little bit better. And once again, that money is never taxed as long as you keep it to the regular health care expenses. Once you start using it for something other than regular health care expenses, then it just acts like a traditional IRA. But if you decide, well, this is going to be my health care fund, and you can grow it, and it doesn't matter, it grows over time, you can use it during retirement, you can use it tomorrow, whenever you want to use it, you can use it. And so this is like my favorite account, and that's one of the best ways, if you have a high deductible plan, to cover your medical costs and help do that.
I'd imagine you still want to be pretty careful in what you're investing in too, right?
Oh yeah. That's why I said if you're gonna, if I'm investing, I invest in index funds and.
But I mean, like,
what
you
I
know,
do.
if let's say it's that first $1,000 or whatever that might go towards your deductible, you might not want that in some kind of risky fund where it's going to take some time. You might not have money when you need it.
And that's why a lot of the places, if you're going to do an HSA, that first $2,000 you put in there, they make you keep in whatever low interest thing they're paying. And it's only after you have that $2,000 and then you can start the stuff beyond that, you can start investing somewhere else. Does that make sense? So it really depends on the rules and where you have your account. So you can check into that.
Yeah, we have an HSA with a high deductible plan for our medical expenses too. And, we love that for the tax deduction and everything else. Our only problem is that we keep having medical expenses, so the account keeps getting spent down. So not sure what to do about that. But another important thing, I think, is to make sure you know what your coverage is when you're signing up for it, because a lot of times people just look at the high line, the deductible is, $2,000, but then they don't look at the other line items like the coinsurance amount and other figures like that. And we actually found my company offered two plans. One was like a traditional plan and the other was a high deductible. And at first glance, that the lower deductible on the traditional plan seemed like it was a better deal. But when you factored in the coinsurance amount after we reached the deductible, after we reached that deductible, 100% was paid. And for us, since we typically have a lot of medical expenses at our house, that ended up being the better deal, especially in years where we use a lot of medical care. So again, it's good to dig deep into the details of your health insurance plan, what you're actually buying, what you're getting, and pair it up against what your medical history is too.
Oh yeah, for sure. I mean, if we have very few medical expenses and needs, for the most part, we go once a year for our preventative care, and then like I have a monthly prescription, and my husband has a monthly prescription, and that's pretty much it. And then maybe once a year, each of us will go in for an extra checkup. And so since our healthcare costs are very limited, it works really well for us. But yeah, if you have like a terminal condition or you have a lot of expensive medication that you have to take, a high deductible plan is probably not for you.
It also
Just
depends on
because of the added cost.
what an employer might even offer you.
Yeah.
Because they might not all offer a high deductible plan. You might have a choice of 3 different, let's say, type of plans. One of them isn't that.
Right.
And similar to what Peter was saying, one might be cheaper than others, but that cheapness probably comes with some cost. You might have a limitation on the different doctors that you have, or that maybe it doesn't have prescription coverage. There might be a reason why it's cheaper. It might be just a better plan. I don't know. But those are things that you have to look into, because you don't want to find out. Usually you can only change those plans but once a year, unless there's like some family change, like you get married or have a kid or something like that. So.
Right.
And one thing we found out with our HSA and health or high deductible plan was that my employer actually contributes to our HSA as well, which is something to consider if your employer is doing something like that. That's free money right there that you can put towards your medical costs or save up for medical costs. So definitely something to look into if they are offering a high deductible plan.
Yeah,
and as someone who obviously my wife works in the same school division I do, so we didn't have to compare, but I noticed a lot of young folks who are getting married, they each have maybe something through work, and one of them could be getting quite a lot better deal in terms of subsidized plan, like you just mentioned, Peter, and it actually makes a lot more sense for one person to totally dump whatever insurance they have and be covered as a new family member under the other person's plan. So you can both save money and get quite a bit better coverage in many cases, especially if one of you works for a government profession or something like that. So
yeah, that's kind of what I did when I had mine. My wife covered mine through her job that paid for everything, whereas if I had it on mine, I would have had to pay like every paycheck some part of it. And some employers will even give you money back if you're not using medical, if you're covered somewhere else. So that's something to consider as well. So let's jump to getting laid off. Sometimes that's coming. A company's changing and you've got 6 months to do whatever. Sometimes you walk in on Monday morning and you find that HR guy standing there by your desk and you know that guy's the angel of death basically. We had a guy like that in my last job where the only time you saw him was, if somebody was getting axed. How do you prepare for that?
Well, I've been preparing for years after working in a company that's gone through different reorgs every year and a half or so. It looks like the dream may finally be coming true, where I'll probably be looking at a severance package, but the severance alone isn't it. Like if you're looking for a career beyond that, you still need to look at what your skills are, have a resume up to date. You need to be able to switch. There's this common thought that working for an employer is sort of the secure thing to do, but you can get that HR guy standing at your desk, and all of a sudden it doesn't look so secure anymore. So, certainly you can prepare by just making sure you're employable beyond that job. And back to the emergency fund yet again, maybe you're not there long enough to have a decent severance, then you need to be able to sort of bridge that loss of income that could come pretty quick.
Now, I know in the States they tend to usually say about 3 to 6 months of expenses as an emergency fund for something along those lines. Is it similar up in Canada?
I'd say so. It's all going to depend on the job market in that kind of situation too.
Mm-hmm.
One place in Canada or the States, maybe you can get a job the very next day. Another place you could spend months trying to get that right job for your field too. So It's one of those tough rules of thumb that you won't really know if you have enough until you need it.
Yeah.
And a lot of people forget to just go down and register for unemployment benefits. If you've been laid off and you're eligible, you might as well go down and register. It's something that'll help you that you don't have to pull down as you're looking for a job. You don't have to draw down your emergency fund as much.
That's a good point. That's even available after the severance too that I was talking about. It's not one or the other. The unemployment's still available.
And of course, that's assuming that you get laid off. You know, if you do
Right,
something, something and you and your boss don't agree one day, and then he lets you go, and it's not amicable, you may not have the option of unemployment benefits.
Yeah, then you really need that the emergency savings there and that good resume.
Yeah, you'll have the HR guy and security waiting for you at the desk. But I think another point is when they talk about that 3 to 6 months or 6 to 9 months or whatever it is, that is going to be the expenses that you need, right? It doesn't necessarily mean that that's going to be your full salary that you need saved up, because you really won't be spending quite the same amount necessarily. So it is something to kind of think about and plan for.
And one of the things that I've done in the past, and that I still kind of do, is every 3 or 4 months, I take a look at what are we spending money on? What are the main things that are spent in the household? And then I sort of prioritize them and say, if I had to give something up, what would it be? And I put things in order so that if something happens, if there's a dramatic drop in income, I can be like, immediately, these are the things that we cut immediately. And I know what they are. And I think going through every few months and just re-examining that and saying, well, if I had to cut back, where would I cut back? So that so that you're not stuck in this moment of panic and going, oh my gosh, what do I do? At least at that one moment, you're like, I know exactly what to do. And it really helps you get a little bit of peace of mind and feel like you can get through it if you're like, I have a game plan and I have a way forward. I may not know what to do after I get to this step, but for now, I can calm down and move forward.
It's like having a kill switch.
Yeah.
Like you hit that, and then all of a sudden this all shuts down, and you can put more towards life support.
That's right.
Wouldn't that be nice? Kill switch.
Yeah. And I think you make a great point, Tom, also, in, just being hireable. If you're somebody who works well and has real skills, you'll have a better shot at finding something. And, one thing that I'm always terrible at, but it's networking. If you have a good base of people that you could give that call up the next day and say, hey, Bob, all right, I got laid off. What do you got at your company? Who do you know? That's a huge benefit. And a lot of industries, there may be a lot of people employed overall, but it's amazing how quickly people at other companies. People jumping back and forth, and how that web all of a sudden, grows before you know it.
I've mentioned it before on the show, but using LinkedIn's sort of the ultimate new Rolodex. Not for all the social features, but literally just the contacts. Like you can look up a company you're interested in working for. So you see a job posting, and you can see who you're connected to, at least as a second connection or something. You don't have to sort of ask around. If you have enough of your actually the people you actually know as connections, you'll find a connection somewhere.
Yeah, good point. So let's go to catastrophe, major catastrophe. Something happens to your home, weather-related, extreme weather, whatever it happens, all of a sudden, you're on the outside looking in at your home, or something else happens. How do you prepare for that? We've certainly heard about stories in the news, in the last few years, where that certainly happened to a lot of people.
Yeah, the first step is just making sure you have that insurance beforehand. Make sure you have adequate coverage that's going to cover the full replacement value of your home if it's homeowners insurance, and just make sure you have all those ducks in a row beforehand. I have a coworker this past week who his house burned down just out of the blue. They don't know what caused it. It was something in the garage probably, but he was home alone working, and all of a sudden he heard some fireworks going off in his garage, and before he knew it, the house was burning down, and all he got out with was his own life and the cat. So make sure you have adequate insurance years beforehand, because you never know when something like that's going to happen. It could be a lightning strike, or who knows what, a gas can in the garage that there's a spark or something and it sets off a blaze. You never know when it's going to happen. So get that insurance.
I find one of the most ignored insurance, especially amongst Gen Yers, is tenants insurance. That they think that just because the landlord says, yeah, I got housing insurance, that's going to cover their $1,500 computer, $700 smartphone, and all the rest of it. Even if you don't have a huge amount of assets under the roof that you're renting, it does not cover your stuff at all. And tenants insurance is so cheap. For like $10-15 a month, you can get coverage on pretty much everything you got. Even some people have $1,000 set of golf clubs. You have no protection for that at all. So.
Yeah, here in the States, we would call it renter's insurance for anybody that's out there listening, but pretty much the same idea. It's a relatively cheap insurance, and yeah, depending on what you have. Hey, look, if you got nothing, you're living off ramen noodles, it's not a big deal. But odds are you still have like some clothes and some basic stuff that you're going to need to cover. So it is something to consider. Some landlords will even require you to take out your own policy, knowing that you're going to be stuck there with nothing if should something happen. And one thing, even with homeowners insurance, is make sure you have all the proper coverage. Sometimes it's easy to skimp on maybe one thing here or there. Like, I'll save this a year, and that's great. But, usually we don't try to put the difference into an emergency fund. Like, I'll save on maybe some type of sewage backup insurance or whatever, But, not going to put the money into savings just in case that happens. Usually that doesn't happen. You just need the savings to spend it somewhere else. So, make sure that the coverage is really what you need for your area, and it all it takes is that one thing that's going to happen once in 100 years, and it's certainly happened around where I am, on Long Island in the last few years with Sandy and Irene, the superstorms that came through.
And I think, too, especially if you're running a business out of your home, you need to double check and make sure that your home is covered for that, because some insurance policies don't cover business use of your home. So your home office could be exempt from coverage. That could be something that they won't pay for. So make sure you double check that, and if you need to get an extra rider or extra insurance for business use of your home. And it's the same within your car as well. Some auto insurance companies do not cover business use of your car, so if you're using your car as part of your business fleet, then it may not be covered like you think it is. So double check your coverage.
And if you have something extra in your home that might be some different type of expense, make sure that's covered. Like an engagement ring or some other, item that you want to make sure you're covered for. So, and another thing I was thinking of, I was disrupted by some sound we have in our background there. Access to documents and such. If you have, let's say, a safety deposit box with all of your insurance documents and all your own personal documents and such, that's not a bad idea, because if your home burns down and everything is in that home, you have to start first going through the process of finding everything and finding out what you're covered on. So that's something to consider as well. What else do we want to go into? Well, there's the big one, the last one, death. You could argue, like, I don't need to prepare for it because I'm not going to be here. But that's kind of selfish, right? So what should we do to prepare for that?
I think life insurance is obviously the big one. If something were to happen to me today, my wife and kids need something to support them. That's obviously got to be the biggest point. Secondly would be a will. What you want done with your possessions if something did happen to both me and my wife in that case.
Yep, I agree completely with the life insurance. Make sure you have adequate life insurance for your family to cover the loss of your income if you were to pass. I have another story. It's been a bad week around here, but there was a family here in Wisconsin that a friend of ours knows, and they were a family with 7 kids and a husband and wife, and they were driving to church or something and hit a deer, and the deer killed the father who was driving. And everybody else was okay and walked away from it just fine, but the father was killed. And so here they are. They didn't have life insurance, and all of a sudden now she's a single mother with 7 kids, has no way to provide for them. In this case, this particular story, they came out okay because they got a big boost by social media, and they had a GoFundMe page that got funded. But that's not going to happen for everyone. So make sure you have adequate life insurance to be able to cover all of your needs if you were to die for your family. And then, like Tom said, also make sure you have all those important documents set aside somewhere where your husband or wife can find them. Passwords, usernames and passwords to all your financial accounts, your wills. You have make sure all your beneficiary information is updated with all of your accounts, all of that type of information as well.
I think you make a good point about the beneficiaries, because that information always outweighs what's in your will. You can put one thing in your will, but if the beneficiary on your retirement account or whatever it is different, they'll go with what the beneficiary is. It doesn't matter what's in your will.
Yeah, and that's an easy one to forget about. You have a kid, and you don't realize that you got to go back and change the beneficiary on everything, all those retirement accounts, all those life insurances, all those trusts and wills and whatnot. You got to add that name onto there. So yeah, that's pretty big. And again, what plan do you have? Like what are your contingencies? What's going to happen? Who's going to do what? Who's going to have access to such and such? Is everybody going to be able to get what they need? When these things are happening. And I think it's an important thing. And it's a tough thing. I think I said earlier in the episode, who wants to talk about this stuff? Most people don't, and that's why it doesn't get done and it doesn't get planned for. And then maybe the worst happens, and then what? And you're really scrounging, trying to make ends meet, and trying to plan for things, and you're doing it in an emotional state that you don't want to have to deal with that type of stuff.
Yeah, I think one stat that hit home for me was Money Magazine said that 78% of us are going to have a major negative event happen in any 10-year period of time. So, that's a majority of us are going to have something major negative go wrong that we're going to need to have planned for. So right there, that just tells me if you haven't thought about these things, you need to, because something's going to happen, whether you like it or not.
Yeah. That's it's an unfortunate thing to have to think about, but by planning now and getting yourself prepared, it makes whatever happens a little bit easier. Sometimes it can make it a whole lot of easier. You get into a car accident, you have the right insurance, you have money put aside. It's like, all right, it's inconvenient, it's going to get taken care of. Obviously you can never make up in savings for a death in the family, but having everything prepared for that inevitability, because it's all going to happen to us one day or another, makes it a little bit easier on your family members. So on that happy note, let's wrap up and do our final word and go around, and we'll just get a summary from everybody here. So we'll start with Tom. What's your final word on preparing for major life changes? Uh-oh.
Can't hear you, Tom.
We're losing Tom here.
Can you hear me now?
Yes, now I can hear you.
Sorry. We joked before the show that it pretty much comes down to your emergency fund and insurance, and it's true. You want to have that 3 to 6 months of emergency savings. You want to have the right insurance, which I would say is pretty much life insurance, critical illness, disability, plus your house and your car. If you got that level of insurance, at least in Canada, we don't have the medical issue quite the same, but you'll be prepared for a lot of what will come.
And Peter, what's your final word?
Kind of along the same lines of what Tom was just saying, but make sure you have that emergency fund, that safety net saved up for 3 to 6 months of expenses at least. At our house, we like to even have more than that if possible, 8 to 12 months, just to plan for any eventuality. And then transfer risk to the insurance companies. There's no reason why you should have that risk on your head of a major illness or your house burning down or any of that stuff. Pay the small amount of money that you need to pay in order to transfer that risk to the insurance companies for health insurance, life insurance, homeowners, auto, long-term disability, those types of things. And then have a budget in place. Make sure you know what's coming in, what's going out, and what's left over, so that if something does happen, you know right offhand what's available and what you need to do in order to get back on your feet.
Miranda, what's your final word?
I'm a big fan of if you know ahead of time that something is coming up, and there are some life changes that you know are coming up. You know if you're going to have a baby most of the time. Most of the time you know you're going to get married. You have at least 2 months lead time. And a lot of the time you know you're going to move. And so for things like that, I think it makes a lot of sense to take stock of where you're at and kind of have a plan and plan it out. Do your best to estimate your costs and look ahead and then start planning for it, saving up, setting money aside, cutting expenses back if you need to, and start putting that plan in place. And a lot of the time, even if you don't specifically say, oh, well, I know I'm going to be doing this in this particular time frame, I think it's worth it to every 3 or 4 months sit down and pick a scenario and say, what would happen if I had to do this? And what would I do? And sort of think ahead about that. And that'll give you some idea of how to prepare.
And Kyle, what's your final word?
Just a quick and easy way to make sure that you are prepared for a sort of worst case scenario, like what happened to Peter's colleague there. If you have housing insurance, people will tell you, well, go through, write down the serial number on everything, do this and that. Or even better, they'll say, save it on your computer. And then if a fire happens, the last thing you want to do is go looking around for this paper or a jump drive or anything. So there's 2 options. For the tech-savvy crowd, what I recommend is just walk through your house with your high-priced smartphone there and just quickly videotape. Just pick up the item, videotape it, and then put it in the cloud. And no matter what happens, no matter what cloud service you use, you have that. Alternatively, you can write it down and put it in a safety box at your local bank or wherever you sort of do your financial transactions. Just make sure that you don't keep your just in case of fire documents in your house.
Well, you can also get like a fire safe or something.
Yeah, you can. I've seen how well those work sometimes.
Oh, never mind that.
My brother was a firefighter. About half of them worked.
And I imagine even if they do work very well, you still have to be able to get back to it, you know? It's not like, place isn't smoldering and there's still smoke coming up. I'm just going to go there. Excuse me, guys. I'm just going to, throw in this code here and pull out some documents while you're wetting everything down. So yeah, having it off-site might be a little easier there.
One of the things we did was just get like a small one where you could just keep your most important documents so that it's portable and if you can, if it's in an easy to get to place, you can just grab it and go.
Mm-hmm. Yeah. All good ideas. Hey, look, we talked about a lot of stuff here, and I think we did a great job of generally covering a lot of this. Like I said, we could do a whole episode on any one of these instances. So if it's something that you're out there thinking about, look, take into heart what we've said, make a plan, act on it, but do your homework because there's a lot more than what we've talked about here. You can certainly, like I said, you could go deep into these things, but do something about it. Be ready for it. Don't get stuck out there. So thank you. This is a great episode, guys. Everybody out there, thank you for listening and watching. And until next week, be good with your money.
Thanks for joining us on the Money Mastermind Show. Get more information at moneymastermindshow.com. Don't forget to subscribe to the show on iTunes and YouTube and follow us on Google+.